The third quarter ended with a whimper as all but the Nasdaq ended lower on the week. After trekking lower Monday and Tuesday, the S&P 500 briefly spiked higher on Wednesday before closing lower on the session. In the end, Wednesday's activity marked both the highs and the lows of the week following the release of the FOMC minutes and the post-meeting press conference. As expected, the meeting ended with the announcement of another 25 basis point increase to raise the target range to 2% to 2.25%. Additionally, the minutes from the meeting no longer held the word accommodative. This led many to wonder if the Fed would be looking to adjust the timetable for future rate increases. However, in the post-meeting press conference, Fed Chairman Jerome Powell stated that the change doesn't represent a significant change in the Fed's plan for future rate increases. There are still 2 FOMC meetings left for this year. Currently, the CME FedWatch tool anticipates the final 25 basis point rate hike will take place in December, with 3 increases in 2019. The rising interest rate environment has created some headwinds for the bond market. Year to date, the Bloomberg Barclays U.S. Aggregate Bond Index is down 1.6%. Meanwhile, investment-grade AAA rated Bank of America U.S. corporates are down 3.12% year to date. In equities, the growth segment continues to lead the style box higher, while value continues to lag behind as of the end of the third quarter. Finally, President Trump reached a deal over the weekend to replace NAFTA with the United States-Mexico-Canada Agreement, or USMCA. This agreement is expected to be signed by the end of November. The agreement opens up the dairy market to Canada, which has been limited under the old NAFTA deal. Additionally, in order for cars to be free from tariffs, 75% of the parts must be made in either Canada, Mexico, or the United States, a 12 percentage point increase from the prior agreement. Furthermore, in a move to balance out labor costs, there is also the requirement that 40 to 45% of car and truck parts are to be made by workers paid at least $16 an hour. The 3 countries have also agreed to meet every 6 years to ensure that the trade pact will be renewed.